Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, and we begin with our updates for the day. Now, the Indian Prime Minister Modi visits the US and met with the US President and few eminent personalities like Elon Musk and Ray Dalio. The Indian markets have been buzzing for a while for their strong macros, increasing investments in the industries, and the rapid growing consumer markets. Indian rupee is also one of the currencies which is offering the second best carry returns in Asia. So there's quite a lot of positives for the Indian markets. But if we speak of globally, we saw UK inflation coming out hot, raising the speculations for a steeper hike by the BOE today. Now, JK, I'd like more from you on these fronts, but we also had the testimony by the US Fed chair, Mr. Powell, who also mentioned that inflation at 2% for US is a long way to go. So, JK, what are your thoughts on these kind of updates?
Hey, good morning, Shikhar. Yes, let's look at the rupee. These positives have been there for a while now, but the exchange rate has actually not reflected those positives. And if you, for example, if you compare it with, say, currency like Mexican peso, which also has a high carry, but it has strengthened almost 17% in the last 1 year, and whereas the rupee is not even 2% stronger from its worst levels. And this is clearly a case of a free floating in the Mexican peso versus a completely controlled regime on the exchange rate in the INR. But that said, recently we are seeing some recognition by investors on the value of the rupee, and we are seeing steady flows. Yesterday also we had some 4,000 crores of inflows, and this month we have already had nearly 3 billion of inflows, following 5 billion of inflows last month. And I mean, these things have seen to it that the rupee's upside is getting slowly limited. In fact, yesterday and day before, the pair found it tough going even above 80 to 15 and dropped back to 81.90s in the offshore market. And I mean, it's only now a matter of whether the investors or the flow guys are ready to sell even at these lows, or whether they look to see whether the central bank once again steps in to push up the USD/INR. But the core bias is for a stronger rupee, but for the central bank, and that is what we will watch out for. Of course, we have our stock market, which is trading at its all-time highs, and one needs to also see whether it pushes through that and then creates another good rally, or it finds a good amount of profit taking to push it down in a correction. Cues from global markets in Asia are not so great. In fact, Australian market has fallen nearly 1%, and generally there is a bit of a negative momentum in the markets in Asian trading zone. So we will see. Otherwise, if RBI is there, we will continue to be in a narrow range, waiting for the time when they will feel it appropriate to let the rupee appreciate. Yes, I think PM Modi's visit in the US, they can trigger a lot of more positives, more business deals, more investment, commitments, and also possibly a push towards a rating upgrade for India. So it is a lot to look forward to as far as India is concerned. On the UK inflation, it did beat expectations for the fourth month in a row, coming at 8.7% versus 8.4% expected. Core inflation rose from 6.8% to 7.1%. So this is one country where the inflation headline as well as core has been continuously going up. In fact, the core inflation accelerated to a new high in May, and the services inflation touched 7.4%. Now, the terminal rate in Bank of England is now at 6% clearly from 4.5 where it is now, and the odds of some odds of 25% even for 6.25%. Now, though the consensus is for a 0.25% hike at today's meeting by MPC. Number of people expecting 0.5% has also gone up. Now, though we did not have much data from Europe, steady barrage of hawkish comments from ECB officials were seen, and market also discounted ECB rates going up to 4% now, and financial markets have priced in a 75% likelihood of another 25 basis hike by the Fed in July monetary policy. In fact, so we have a situation where the major central banks are not done with their interest rate hikes, and that is somehow, despite that, somehow we are seeing the asset markets holding up, and maybe I think we still need some more time for the lagged effect of these increases to be show up, and that is what even Powell was hinting at in his testimony to the Congress, the first part of it to the Congress yesterday. And although his broad statements were no different from what he stated post FOMC, and clearly 2% inflation remains his target, and he was looking at, we are overachieving on the employment goal but underachieving on the inflation goal, and it's hard to know what will achieve Fed's dual mandate. And nearly all FOMC participants, according to Powell, expected that it will be appropriate to raise interest rates somewhat further in the end of the year. And so we also had the other Fed members like Goolsbee, who said that it takes time for interest rates to work through the economy. So higher for longer is the hidden theme there. And even Mr. Bostic, who used different words to say the same thing. So at least the Fed is not relenting on its stand that more interest rate hikes are required, but the market doesn't seem to be yet fully convinced about it. And on market's reaction yesterday is we did see some small sell-off in the US market. Of course, Nasdaq fell much more, but still they are seen to be a correction to the strong rise we had this year. And we will see more clues on the economy. Conference Board's leading indicator index today, jobless claims, which has come high for the last 2 weeks, and second part of Powell's testimony to the Senate Banking Committee. All of this will be in focus. Of course, before that, we will have the Bank of England meeting as well. So on the currencies itself, dollar has somewhat weakened yesterday, but of course, euro holds below 1.10, and the dollar index holds just around 102 crucial level. Possibly we will be in a slight narrow range until the events of today are out, and we have some sort of a strong resistance being built up in 142.50 on the USD, and some market men actually hinting at possible intervention, because some of the Japanese importers, according to the Duncan survey, have actually priced their import costing at 135 and below. So maybe that's one reason why the Bank of Japan might be keen to see that the yen does not weaken too much from these levels. And a couple of developments overnight. One is we had a huge rally in the Bitcoin, almost 7% there, and that was also driven by floating of a new crypto exchange, which market are seeing it as positive development for the crypto, and possibly that is one also possible that it is seen as another safe haven buy now that we are having a lot of money being put into other financial assets, and possibly we are seeing some sort of diversification into the cryptos, which has remained on the lower side for very long. So that's it. A lot to look forward to. We'll come back with more updates tomorrow.
Okay, JK, thank you so much. And that was quite interesting. And I really like the point wherein you highlighted Mexican peso being one of the high carry currencies has appreciated 17%, while Indian rupee is still quite close to the all-time high seen few months ago. Now, we have already observed quite a controlled or a steady state trading for the Indian pair, but on the other end, we are also observing the Indian equity markets booming with the stock indices near all-time highs again. And there has been, discussions around rating upgrade for the Indian economy and Indian nation. But having said that, we are also finding reports for the UK economy with the core inflation, as JK mentioned, at a new high for the month of May, and now the terminal rates being expected at 6%. This can lead to further, speculations on where the rate increases shall end, or are we near the end of any rate hike cycle. This is also with this we are also seeing the probability of another hike by the Fed rising. Now the market participants are expecting another round of hikes, while the US economy continues to overachieve on its employment targets, but underachieve on the inflation side. And quite interestingly, what we also observed was the rally in Bitcoin with the launch of new exchange for the cryptos. Now, this space has been on the lull for a while, but it seems that there's some traction going on again in the cryptos. So the risk on probably is, having some effects over here as well. That's it for today, folks.
Shikhar, there is one point I just wanted to highlight, and I did not mention there. The Indian rupee option vols have dropped to 16-year lows in the recent past. So we are at 4.25% on 6-month option vols, and that was seen last in 2007, 2008. And a record low for option vols in India is 1.5%. And so we are not very far from there. And I mean, one has to be alert. Such low walls eventually can lead to big moves or big directional moves. And just wanted to mention that to the market. Yeah, thank you.
Definitely, JK. And we have observed the vols being quite low. I mean, look at the kind of range dollar rupee has been trading in. It is only a kind of, alert situation that one can be in with such low volatilities, that we can expect some moves to start coming anytime soon. So that's it for today, folks. We hope you manage your risk accordingly, and we shall come back again tomorrow with another round of updates. Thank you so much for listening.